Hello everybody and welcome to the Japanese yen. We'll try to keep that video as short as possible. Um, Obviously, if you look at the weekly chart right now, you realize that the currency is into a consolidation pattern and actually into a some would argue is a continuation pattern in the form of a triangle. The definition of the triangle is basically a consolidation that would confirm or should usually be before the currency resume is its previous trend. The previous trend was of course up, so based on that you would expect that the currency would resume its move back up. It usually does that by breaking the triangle at 2/3, which is basically that purple line I have drawn on the chart, and that would put us on about March 1st if it happens. Though, looking at previously, it is not unusual for the Japanese yen to act as a triangle. It has done that here. It has done that here as well. Though the objective being the length of the pole has not been very consistent, especially with the one in the middle. In any case, on the weekly chart, this is what we can see. Another thing that we can see um, going into the daily chart is that the currency has been ranging between those roughly between those levels here for quite some time, actually for about 2-3 weeks now. Okay, and what has happened here is that last week the currency broke above that level of resistance, but has been stopped by this resistance uh, of our triangle. Uh, the move up was probably because of the non-farm payroll of last week, which pushed the dollar higher against the euro and everybody else. Even though it did, uh, it was not strong enough to push above that triangle level of resistance. So, what can you expect? Well, as always, you can expect up, down, or sideways. Based on that, you need to decide what you're going to do if either one of those things would happen. So, if we look at the downside, what could possibly happen is that the currency, this breakup here, would be a what we would call a false break from the range that it has been in for the past 3 weeks. In such a case, the currency would go back within the range and very quickly go to the base of the support of the range and probably break it as well from that level, and the false that would be also a false break before returning back up into the range. Possible scenario, considering that we are trading within the characteristic of a triangle, if this is the case. So based on that, what you would want to see, you would want to see the behavior of the currency once it goes back into the range, knowing that you would have a strong natural level of resistance at the trend dragon trend line, which is the middle of the range, and we always have resistance and support in the middle of the range. And of course, you know where the target would be, which would be the base of the range. In order to trade the range, you can use trend dragon, of course, but you can also use a stochastics or oscillator, and basically take position based on, of course, the price position, but also what the stochastic or the oscillator tell you breaking down. If the oscillator is on an oversold position and comes back in the middle, then that would be a sell signal. If it's on buy signal, if it's on overbought position and comes back under it, then it would be a sell signal. So that's one strategy that you may want to look at in there. Okay. Now on the upside, obviously the break of the triangle would be one indication that the currency is actually going to move up, and the logical objective would be that previous high line here, which is would be a level of support. Of course, when we're looking at a continuation pattern, a triangle can become a rectangle, and that could be the case. That could become the case as well, which in this case the currency would be ranging between those two extremes right here. So what would you need to be looking at? On the breakup, I believe that it would be smart to look for confirmation. So what does that mean? You have a low here, you have a second higher low right here. The push above that is very slow. You would want to wait for a break and then a retracement, creating a third higher low before entering. Obviously, having the objective being that red line here. So if you don't want to wait for a retracement, you can enter at the break, but of course you would want to have a very tight stop loss, especially under that line here, which is weekly, and well, it's pretty much the range that the currency has been for 3 weeks. So that would be where your stop loss should be, and probably would want to look at this level here if it breaks that level here. Because this is the previous on the down, it was pretty much would be the previous high or previous level of resistance. So that's what you would be looking at right here. Very hard to not very hard, but a bit difficult to trade into a consolidation pattern and ranging pattern. I mean, right now, we can only say that the currency is indeed ranging. Right now, it has broke up the range or break out of the range, and we want to make sure that this break is not a false break, but that the currency is actually wanting to go up. And this week is going to tell us what it will do. So based on your time availability, if you don't have much time, I would probably consider looking at the daily chart. Make your decision based on that. If you have a bit more time, maybe go into the 4-hour, 1-hour chart. Of course, on the upside, I mean, this type of market condition, you want to have tight stop loss and protect your profit. Don't be greedy, and if you have some profit, don't hesitate to take it out. Okay, that's it for the Japanese yen, and I'll send you also the British pound and the euro dollar.